Good morning, friends. The topic which I will be discussing today might draw different opinions and views from various experts, but still it's quite relevant and an interesting one to discuss about. Accounting for depreciation in the books of charitable organizations. So you might be thinking now that why at all this topic requires a discussion. Let me tell you. As I said earlier, different experts might have different opinions. Some might be of the view that since depreciation is not an allowable expense for charitable organizations as laid down under section 11 subsection 6 of the Income Tax Act, so it is not required to be charged to income and expenditure as well. They are of the view that since entire capital expenditure is considered as an application of income as per the provisions of section 11 and 12 of the Act, they are not required to be depreciated at all. In fact, we have come across several financial statements not claiming depreciation on the assets since inception. Others are of the view that depreciation is something which is integral and unavoidable part of any fixed asset except land and should definitely be charged to income and expenditure. Well, let me share our opinion on the same, and we are with the second one. Yes, depreciation should definitely be charged on the assets and reflected in the income and expenditure account accordingly. Now, the question comes, why even after it's being disallowed by Income Tax Act, it should be charged to the income and expenditure account as a charge on assets? As per erstwhile Accounting Standard 6, which is now merged with Accounting Standard 10, depreciation is a measure of wearing out, consumption or other loss of value of a depreciable asset arising from use, passage of time or obsolescence through technology and market changes. In simple terms, it means wear and tear on the assets over a period of time which reduces its life and value to a considerable extent after usage starts. Every asset has a useful life after which it requires regular maintenance and repairs, or it needs to be completely scrapped. Now, my point here is what the auditors mention on the face of Form 10B or independent audit report, that financial statements give a true and fair view. Do you really think that without charging depreciation, the assets are reflected at the true and fair value? No, they are not. So, in order to depict the true and fair value of the asset position, an organization should charge depreciation on its assets because wearing and tearing out, especially due to its use over a period of time, is something which is unavoidable. Please let me know your views also in the comments section. Secondly, in our opinion, accounting and financial statements are usually done based on the generally accepted accounting principles and policies prevalent in the country, which again takes you back to the accounting standards. Income Tax Act is a separate, independent act in itself, and just because any particular expense or charge is not an allowable expense as per the income tax provisions, it's not correct to say that it should not be charged to income and expenditure account as well. I repeat, just because any particular expense or charge is not an allowable expense as per the income tax provisions, it's not correct to say that it should not be charged to income and expenditure account as well. Treatment of depreciation in the books of accounts and computation of income as per the Income Tax Act can be different and both are independent of each other in our opinion. On a lighter note, unless you charge any expense in the income and expenditure, how will you disallow it in the computation? Does not this mean that even the legislation is not barring you from charging depreciation as an expense in the income and expenditure account, because if it has to disallow it, first it should be allowed to be so charged. I would also like to make you aware that even the apex court have settled this issue of allowing the depreciation to charitable organizations up to assessment year 2014-15, that is before section 11 subsection 6 was introduced in the act, irrespective of the fact that the entire capital expenditure amount has already been considered as an application of income. Does not this mean that charging depreciation in the income and expenditure account and disallowance under any particular act are two different things? Also, if you will check the technical guide on applicability of accounting standards on non-profit organizations released by Institute of Chartered Accountants of India, you will find the erstwhile Accounting Standard 6, which spoke about depreciation, was very much applicable even to non-profit organizations. In fact, as a matter of best practices and accounting principles, it's always advisable to follow the prevalent accounting standards for non-profit organizations as well to ensure consistency in preparation of financial statements. Thirdly, our opinion is further strengthened by the fact that even globally, depreciation is required to be charged on the asset. According to Financial Accounting Standards Board FASB Statement of Financial Accounting Standards number 93, that is recognition of depreciation by not-for-profit organizations, all non-profits are required to capitalize and depreciate. I repeat, according to FASB 93, that is recognition of depreciation by not-for-profit organizations, all non-profits are required to capitalize and depreciate significant exhaustible assets effective for fiscal years beginning on or after January 1, 1990. So, in our opinion, without mixing up the two different statutory concepts, the rationale behind charging depreciation needs to be understood, and the charitable organizations should not be under a misconception that since depreciation is not allowed as per Income Tax Act, the assets should not be depreciated at all. I hope I have been able to communicate my view on charging depreciation on fixed assets for non-profit organizations. Since no specific rates of depreciation has been specified for NGO sector, considering the fact that Income Tax Act is very much applicable to NGOs, I am enclosing the rates of depreciation of some common assets as per the Income Tax Rules 1962. You can download by clicking on the link given in the description. For more such tutorials and concepts, keep tuned to our channel and don't forget to subscribe it. For any clarifications or queries, you can drop an email to us or contact on the number provided on our website. Thank you.